we've got to remember about this COVID-19 outbreak is that it is very much, it's going to be having a larger impact on the services sector, both in China and globally. So the figure coming out today was quite positive. We do actually believe that it is going to be domestic driven, where we do see this recovery, as we saw with those net export orders. They're still going to be very negative, and we do expect with global trade contracting that exports is going to weigh on the recovery. So it's very much going to be on the services sector, seeing that consumption starting to pick up from the very low levels.
Okay, and this, of course, a lot of the consumer confidence will come down to any risks of a second wave. I mean, how confident are you feeling on that front when it comes to the odds of a second wave emerging?
I think it'd be difficult to sit there saying that we could be positive about a second wave. It's how it's managed and the extent of that. I think really, though, for consumers, it's going to be more on, income concerns, employment concerns. And as we saw with the national report last week, that employment actually remains a very big force for the government, that they want to ensure employment stability and actually increase employment by about 9 million this year.
Sian, hi, good morning. Tanveer also joining in this discussion. You are essentially saying that a big stimulus package is unpopular in Beijing, and we've seen that. They've been very conservative and reserved about the stimulus that they've announced on the fiscal side, even on the monetary policy side, to help the ailing economy currently. Why do you think they have been so cautious? Why do you think they have been so measured, on the back foot, with regards to stepping up on stimulus measures?
Well, I mean, I think, one, it's all the deleveraging that they actually undertook prior to sort of even the trade war. And so they do actually want to make sure that they're not actually just fueling debt once again. The other fact is that they'll be confident that, yes, we saw that big plunge in Q1 GDP in the first quarter, but going forward, we will be seeing that recovery. We're looking for GDP growth to increase by about 4% year on year in the second half. So whether or not they need to actually apply so much stimulus this year, we don't think that they need to. That said, I mean, we've had the tax cuts, which have been extended as well, so there are measures still there, and there is still a big thrust for that new infrastructure spending.
Okay, and very quickly on the Hong Kong economy, what is your outlook there in terms of what's happening with regards to the US looking at revoking its special trade status, and also the fact that the economy has either ways been grappling with the perils of COVID-19?
Yeah, well, I mean, we've been quite pessimistic on Hong Kong because, of course, there's also been the protest that we had beforehand. So the Hong Kong economy is in recession. We're looking for it to contract by 6% this year. In terms of the revoking of sort of special privileges, I think there's a couple of things we need to remember is that actually Hong Kong's exports by themselves, so not re-exports of Chinese goods, is actually fairly small. The other fact is also to remember is that will they lose their role as sort of a global financial hub? At present, it may take some of the shine off, but we don't think that it will because US firms still want to enter into the have access to the Chinese market, and Hong Kong still remains one where capital flows are unrestricted.